Inflation, inflation, inflation. Bureau of Statistics releasing the numbers for Nigeria. Headline 32.15%. So it's decelerated from 33.4 in July. This is the second consecutive deceleration that we have seen in inflation in Nigeria. It is the same story. Yeah, this is year on year. Let's quickly hop over to month on month. You will see, although core did climb though slightly, but you see the same situation month on month. That is it. We've set the table. Ibukun Omoyeni is with us. Very happy to have him. Sub-Saharan Africa Economist with Vetiva Capital Management. Ibukun, good morning to you, sir. Thank you so much for joining us. Ibukun, what is the reason for the deceleration? What's happening?
So we had expected a deceleration in inflation in August, although there were quite a number of shocks we saw coming. The protest, we saw fuel scarcity last month, but we know that this is actually harvest season, and in harvest season you usually see food prices come down, and that is why even despite the rise in PMS price last month, we are still seeing a deceleration in inflation. We noticed that the scarcity of PMS actually affected core inflation, and we saw core inflation rise. But if you look at core inflation, it's around 26%. Food inflation is around 37 or so percent.
Yep,
and
right.
Looking at the two, it shows that the harvest season overrode the effect of scarcity on food prices. And if you look at September, you'll find out that a lot of staple food items, the prices have been falling, from rice to gari and other staple items. Although some have recorded mild increases, but we've not seen significant pressure as we saw in March, April earlier this year. Yeah. And because of that, that's why we are seeing a deceleration in inflation. Okay,
so but I take you now to September the 10th, last week Tuesday, when the NNPCL revised prices upwards. Will that not play in, or if we have this conversation in October where September numbers come out, aren't you expecting a rise?
Even as it stands right now, there's a possibility that inflation might rise in September. But historically, we've discovered that there's a huge forecast error for analysts or economists in the month of September because of the impact of harvest season, right? So you find out that there's a tendency to overstate the state of things, because even though we saw that significant rise in PMS price from about 767 on average across the nation to around 885, people are buying for at 925 even in Lagos,
right?
And even up north, they are buying at close to 1,000 naira already. So the new announcement, would it really affect food prices? Well, I think the September numbers might skew towards the first 10 days than the last 5 days of the opening months of September, right? Last year when we had the subsidy removal issue, the MBS released a tweet that the survey will capture majorly the first 2 weeks of the month. And it just makes sense to look at it on the balance of scale, on the balance of things. Food prices actually fell in September, but it's very possible that the data might skew more to the opening days of September than to the latter days of September. But in October, there's a possibility that we might begin to see that effect, but it's still very open. Yeah. It's very possible that we can see inflation rise in September. So there's going to be a lot of controversy around where inflation is going to fall. Yeah. But if it falls, it's still in line with prediction that the harvest season is bringing food inflation down. And don't forget that this food, the factors it reacted to in February, March, April was not PMS price. Right. It was sales of food to neighboring countries, huge off-takers buying up our food, and because of our weak naira, right, our exports are cheaper. So a lot of our Greek exports were going to neighboring countries, and you saw some state governors clamp down on that by introducing a blockade. We didn't understand what that story was about then, but it was more about those food exports that was hindering local consumption. And now that we are seeing the harvest season come to play, it's very possible that it might actually override the impact of the PMS hike. All right, well,
we'll see what happens. Speaking of PMS, we have been doing an oil, we check oil every time. Oil now is at a low we haven't seen since 2021, 2022. So with where prices are now, and we are hiking PMS, I know we're moving towards a more market-determined. How do you see things working out with oil is to climb in the near future? What's your own outlook for oil?
I think the consensus estimate for oil now is that oil prices will actually decelerate. If you look at it, the geopolitical risk associated with oil has dissipated. And now, by looking at the fundamentals, demand growth, and supply, and we are seeing a lot of concerns around weak demand for 2025. And that's why some analysts are saying it might fall to up to $50, $60. But again, we just keep monitoring that to see how that pans out. But there's really no much upside risk to oil, even in the near term. And I think that's one positive for PMS prices, right? But if you look at the flip side, that's not positive for Nigeria in terms of the fiscal revenue. Because, but again, I think we need to work around our fiscals a lot, because there are a lot of issues that need to be addressed in that respect. We know that the current administration has the tax reform in the works in order to replace all the huge taxes that are bringing in little or nothing to very few taxes that could raise our tax to GDP. So we'll keep watching out for what the fiscal guys have for us, and that would really impact how things play out. But for oil, we think that there should be measures to actually diversify from oil revenue. We see that in terms of customs, we see that in terms of other non-oil revenue sources. But of course, it has had a negative impact on trade because the huge custom tariffs led to a reduction in demand for certain, for example, cars and a lot of appliances. Yeah. Those tariffs is leading to even though it's leading to more revenue for the government, it leads to weak consumer demand. So we think that, albeit as long as oil prices don't overshoot, because high oil prices are also not too good for Nigeria because of the subsidy situation, but we think that further adjustment in the PMS price towards the accurate price will make us adjust better by the time the price begins to fall. So, but we think that the major factor driving the PMS price now is the exchange rate figure. Once the exchange rate begins to stabilize or begins to, like we said before, it's actually undervalued in terms of fundamental valuation. And when you look at the fact that most of the money that has been printed in the economy is reflected already in the exchange rate. Yeah. So going further from here, measures to improve output and to curb money supply expansion would actually help support the exchange rate. So it's very, will I say, unlikely to see a huge blowout in the exchange rate, given the fact that we have a domestic refinery and we have more coming on board. Although there might be some net offs, but we think that from here we might see a bit of stability in the naira rather than outright depreciation or outright appreciation.
Speaking of, that's upstream. Speaking of the Dangote refinery, we had you on the show a while back when you were, forecasting how it would help the markets and so on. There's a quote from Ip Man. I don't even know if we should be addressing this, but I just wanted to bring it to your attention. I think he's in charge of welfare or something. We can put up that quote from him. He says that essentially the prices, here it is. Let's get it up here. If NNPCL can sell Dangote product higher than the imported product, it doesn't make sense. What is the celebration we're having all this while? What do you make of this? I'm surprised a marketer would be saying this, but what's your read of it? Because it's in papers today.
Okay, so I think prior to now, there's been the element of under recovery in PMS pricing. Because as at the time we had that interview in June, we said PMS should be around 906 naira to a litre, 924 naira to a litre per litre, right? And now we are seeing 950 naira per litre. Right. So it just shows you that it just shows you that prices were not still reflective of the market circumstances. And like I said before, the February-March exchange rate depreciation, we didn't see a similar jump in PMS price in accordance with that FX weakness. So now that we are seeing that adjustment now, it's just to reflect that the exchange rate has moved from where it was before last year to where it is now, and we'll have to pay close to that price. But we think that going forward, there are a lot of factors that could actually help to support exchange rate stability and possible appreciation. We have the Naira for crude arrangements coming up in October. We'll keep monitoring to see how that will affect the pricing dynamics. Would there be a significant change in terms of reduction in prices or in terms of how the pricing will be? Because we have to find out that by the time, for instance, most of the crude that was bought for this PMS was bought maybe at $80 levels, on $7 levels. Levels are quite high, and that's why you're seeing this current price. So what will be the terms for the new contract, as what exchange rate will be done, that will really determine where PMS prices would fall. There were speculations that it could go to as low as maybe 800 or 600. What you're saying is exchange rate to go to as low as 8,000 naira to $1. Right? So what really drives the PMS figure is the exchange rate and Brent price, but more so exchange rate, because in Nigeria, we've had more issues with exchange rate than with the Brent price.
Now, I want you to put on your monetary policy committee hat. I want to put up our charts. We've got two charts showing the trajectory of inflation since the devaluation of the Naira and since the first partial fuel subsidy removal, both for year-on-year and month-on-month. So, Ibukun, if you're looking at this chart and you're at the MPC next week, you can see the trajectory, you see the deceleration for year-on-year. It's the same thing with month-on-month. What do you think they will do? It was even particularly more pronounced with month-on-month. But what do you think MPC is going to do next week when they meet? What happens? What do you think is going to happen?
We think MPC will likely pivot towards a hold. Okay. And that's because inflation is accelerating. We are seeing the impact of the harvest season on food prices. We see in October and December the impact of the 150-day the food importation reforms would actually take place such that certain food items, the tariffs on them will be removed, and that would actually help in deceleration in food prices. So we think those fiscal factors could actually help support the decision to hold, given the fact that the CBN has raised rates by about 800 basis points this year. And by the time those rates have begun to take effect, it can have a very harsh effect on the economy. So you don't want to overheat the economy by raising interest rates, because every interest rate hike has a lag before it actually permeates the economy. So we think that it might likely hold for the rest of the year if possible. But we think that if there is a surprise increase in September and October, in November, they might consider a slight need for a slight hike, maybe 25 bips. But I think overall, if you look at the US Fed pivoting towards a rate cut, you will see that even at the current levels, our interest rates are quite attractive to foreign portfolio investors.
Ibukun Omoyeni, Sub-Saharan Africa Economist with Vetiva Capital Management. It is always a pleasure having you on the show to talk about exchange rate, in fact, the Nigerian economy, Sub-Saharan Africa in general. Thank you so much for your time. Really appreciate it.